Hi, welcome. It's Michael here. We're going to be diving into the Competitive Edge Intelligence briefing for November. So let me just flick my camera over and then join me. Right, we're going to be running through the competitive deal playbook for SaaS. So this is the report for November 2025. So the way we've compiled this is basically we've used data sources from verified proposal data and then also enterprise buyer feedback and then also analyst validated pricing benchmark. So we've basically scraped a whole ton of data, and this is basically what we're presenting today. So really excited about going through this. So this is just basically the executive summary. If you want the full report, it's available free. It's basically something that we do every month. The link is in the description. So I just want to go through the executive summary here today. So essentially what we're seeing is that the SaaS pricing landscape is shifting faster than at any other point in the past decade. Just think about that. So we basically analyze data of 100 leading vendors, and that's including the likes of Salesforce, HubSpot, Zendesk, Workday, etc., etc. And basically what we're seeing is an unmistakable reconfiguration of pricing, bundling, and also discount levels used to win and retain enterprise and mid-market deals. So these are basically 250 seats and above. And essentially, our analysis shows three key defining trends shaping SaaS competitiveness in late 2025. So number one is usage-based pricing. That's basically overtaking seat-based models. So once confined to infrastructure and API-driven platforms, usage or consumption-based models now appear in nearly half of new SaaS categories reviewed. That's basically signaling a structural pricing reset across CRM, analytics, workflow automation, you name it. All of those 100 companies, we're seeing that dramatic shift. Now, some interesting reasons of why. So is that because enterprise buyers are just getting more savvy in terms of they're demanding usage-based, so they're not leaving money on the table? Quite possibly. But this is a massive trend that we're seeing. The second area is around the bundled platform suites are replacing individual module sales. So that basically means that where in the past we saw point solutions, we're now basically seeing multi-product bundles and tiered suites within the same package that has been offered. So essentially that's there in order to basically defend margin, simplify renewals, and also lock in cross-product adoption. So what SaaS vendors may have lost out in terms of moving to usage-based models, they're now basically getting that in terms of the platform suites. And the idea is to sell across a range, a portfolio. Now, many of you will know that this is a macro trend we're seeing across technology. That basically point solutions are basically being gobbled up by larger platforms in order to have these larger platform suites in play. This is a macro trend that we foresee happening, particularly over the next 5 years. There's going to be a lot of M&A in this area, and that's already ramping up. But essentially, this allows selling across a range, and then also driving more upsell and cross-sell, essentially. And then the third area is around discounting. So there is discounting going on in order to get buys over the line, but it's been very much targeted rather than broad-based. So you're not going to see a lot of price shouts in the marketplace, but then under the table, in terms of those discussions, that's very much happening. So what we're seeing across all data points, and this is across 100 SaaS vendors, is that discount language is appearing in roughly 1/3 of vendor communications. And that when that's expressed numerically, that's about 21% off rate card in terms of those negotiated discounts. So this suggests basically more of a pivot to disciplined scenario discounting rather than volume giveaway. So in the past, we know that at the end of each quarter, you see kind of massive discounts actively promoted in the market. Those things are becoming a lot more concealed now. It's probably a move from investors. They're putting money in, they want solid returns now. They don't want to see a lot of, as you will know, the contra plays that we all used to play in the past. So some of the key takeaways from the exec summary: usage-based models are replacing seat-based pricing in 47% of new SaaS categories. Those are the new categories as part of the overall. Discounting is increasingly tied to multi-product, so selling across a range. And then also what we're seeing is that there's more aggressive discounting to tie customers, enterprise and mid-market customers up into long-term agreements. So we're seeing very aggressive pricing on the 3-year and the 5-year in particular. Renewal friction is emerging as the next competitive battleground. So pricing transparency and perceived fairness are overtaking list price as renewal drivers. So that's negotiated basically. And then enterprise buyers are reporting 4.23 out of 5 average satisfaction with pricing fairness, but the gap is widening between perceived and actual value in renewal cycles. So if you want more detail, the link's in the description on where to get the full report. This is just basically the exec summary. We go into a lot more detail on the actual report. It's free for November, but some really, really exciting movements going on in SaaS in terms of the deals that we're seeing over the last few weeks. So hopefully that's interesting to you, and I'll catch you on the next one. Thanks a lot, Michael. Out.